Hey guys, and welcome back to the channel. My name is Mike, and this is the Bullish Bear Show, where we give you the bare truth about money, markets, and making your way through this crazy world. So let's get right into it. I sold Micron right before earnings, okay? And I know exactly what some people are going to say. Why would you sell a stock that's ripping? Why would you sell an AI winner before earnings? What if it keeps going? What if earnings are like awesome? And look, those are all fair questions. I get it, okay? But this video is not about me calling the top. This is not a Micron is dead video, and this is not me saying the AI trade is completely over by any stretch, okay? This is just a real capital allocation case study, okay? And we'll break that down as we go. Because ultimately, sometimes the hardest stock to sell is not the loser, okay? Sometimes the hardest stock to sell is the one that made you look smart, okay? And that is exactly what happened here. I didn't sell Micron because it failed. I sold Micron because it succeeded. That was the job, all right? This was a monster winner. It did its job over and over. But after a monster move and heading into a high expectation earnings event, the question and the thesis starting to change, okay? The question was really no longer, how much am I up? The question became more, would I buy it here at this price today? And for me, at this price before earnings, after this kind of run, the answer is no. And that's an emphatic no, okay? So in this video, I want to walk through why I sold, what I think about Micron now moving forward, and what would make me look at it again. And ultimately why selling a winner is not betrayal, it's just capital allocation. All right, so let me start with the real numbers because this is not theory, okay? This was my real money that I had invested, some in the Beast and some in other accounts, okay? In the Beast, I sold 75 shares total of Micron. 50 of those shares had a cost basis around $98, and 25 of those shares had a cost basis around $315, okay? Those 75 shares turned into roughly $77,000 in proceeds with an estimated profit of around about $64,000, okay? The other 35 shares I had was from selling puts in another portfolio, which had a cost basis around $101, all right? We unloaded those on Friday between 11 and 1120 bucks on average, okay? So across all accounts, it was about 110 total shares that we exited. The rough math looks like this: around $16,000 total invested and around $115,000 to $117,000 in total proceeds, roughly $100K profit. Okay. Now, I'm not saying that to flex at all. I'm saying that because it shows why this decision matters. When a position turns into that kind of winner, you have to stop thinking like a fan and start thinking like a capital allocator. Okay. Because, a huge gain does not protect itself. You still have to make a decision. Do I keep riding this thing? Do I trim? Do I sell? Do I let the earnings decide for me? Or do I step back and say, man, the stock really did its job? Okay, that is what it did here ultimately. All right, Micron did its job. It rewarded the thesis, it rewarded my patience, and it turned into a monster winner. But at some point, a monster winner can become a monster risk if you forget why you bought it. So obviously, for those of you that know me outside of the channel or personally, we've been talking about Micron for almost a year. So this comes to no surprise to you, but I didn't sell Micron because it failed. I sold it because it succeeded, okay? And that sounds simple, but most investors are going to struggle with that. They only think about selling when something goes wrong, okay? The stock misses earnings or the thesis breaks or the chart collapses, the story changes ultimately, but sometimes the opposite can happen. Okay, the stock works too well, too fast. The expectations get higher, momentum gets crowded, and ultimately everybody starts seeing the same story. It's usually my cue to exit. All right, and suddenly what was a great opportunity becomes a much harder risk reward situation. Doesn't mean the company is bad, and it doesn't mean the story's over. Okay, it just means that the easy part of the move is probably already behind you. Okay, and when that happens, you really have to be honest with yourself. You can't just judge the stock based on your cost basis. Okay, you have to judge it based on today's setup. That is where people, like in my opinion, they get trapped. They say, well, I'm only in at 98 bucks, or, my cost base is so low, I can just hold this thing forever. And sometimes that is true, but not always, okay? Because your cost basis is your history. It's not the market's responsibility. The market doesn't care where you bought it. The only question that matters today is this still the best use of my capital, okay? And for me, after that kind of move into earnings, I've decided it's not. Okay, so pay close attention here. This is a real investing lesson, okay? At the beginning of a position, you ask, what can this become? All right, what is the upside? What is the thesis here? What is the setup? But after a monster run, the question has to change. It cannot just be how much am I up? It has to become more so, would I buy this stock here today? Okay. And that's the test. If I had fresh cash sitting on the sideline, would I be excited to buy Micron right here after this huge run heading into earnings? And for me, like I said, that answer is no. And that's when I knew I had to make a decision. Okay. Whether it's popular or not, I had to make it. Okay. Because if I'm not going to buy it here today, then I ask myself, why am I still holding the whole thing? Okay. Now that doesn't mean everyone has to sell, and that's not what I'm telling you to do. Okay. This is just what I'm doing with my money. Some people have different time horizons. Some people are running a whole different strategy. Some people may be willing to sit through the volatility, and that's fine. But for me and my process involving the beast, this was no longer about whether Micron was a good company. This was more so about risk reward. And that has definitely changed. Okay. A great stock can still become a bad risk reward situation. All right. And this is the line that people need to really understand. You can like the company, you can respect the story, and you can believe in the long-term theme. And you can still say right here, right now, I don't love the setup. That's not contradictory. That's just discipline. Now, I want to be real clear on something. I am not bearish on Micron as a company. Okay. And I'm not saying the bull case is fake or dead. The bull case is real. AI definitely needs memory. Data centers need memory. High bandwidth memory has become one of the most important pieces of the AI infrastructure story. Okay. And Micron is directly tied to that theme. That's why the stock worked, okay? And that's why big money, smart money, and institutional investors got behind it. And ultimately why the move was so powerful. It's why people are still excited about it. And honestly, if earnings are strong enough, Micron can absolutely keep going. It can squeeze higher, and it can punish sellers, okay? It could make me look like I exited too early. And I'm okay saying that, because this is not pretending, this is not about pretending that I know the future, because I don't. Nobody does, okay? And I'm not saying Micron won't go higher. I'm saying for me, the risk reward has changed significantly, okay? Two very different statements, and that distinction matters. Because the goal is not to sound smart on the internet, the goal is to manage my capital. If Micron goes higher after I sell, I'm not going to sit here and pretend that's impossible. It's absolutely possible. But I don't need to catch every last dollar to win, especially after the stock delivered life-changing type of gains, inside of one position. So that being said, why sell? Okay, well, here's the simple answer. The stock 12x'd in less than a year. Expectations are higher than they've ever been, and earnings are right around the corner. The trade for me has just become too crowded, okay? Stock's been priced for a lot of good news, and I was sitting on a massive gain that I felt like I could allocate elsewhere, okay? This is the kind of setup where you have to be really careful because earnings can be tricky. Sometimes a company will smash their earnings and the stock will still drop just because of the expectations or something that was said in the earnings call or guidance. Sometimes guidance is good, but not good enough, which is happening a lot in the AI case right now, okay? Sometimes the numbers are strong, but that's already been priced into the market. And, sometimes the stock has just simply run so far ahead of the event that the setup, it's just fragile now. Okay. And this is what I'm trying to avoid ultimately by selling Micron. Okay. I didn't want to turn a monster win into an earnings gamble because that's where things get sloppy. And I've done that before. People start, stop managing the position and they start hoping for one more big green candle, one more gap up, one more squeeze, one more analyst upgrade, or, one more perfect report. And look, maybe you get it. I hope you do. Okay. But maybe you don't. And for me, I had to ask, what am I really risking here? And the answer is real simple. I was risking a huge realized win for the chance to maybe squeeze out a little bit more upside on an already extended name. It just didn't feel like the right trade for me anymore, okay? So ultimately for me, the goal is not to catch every last dollar. The goal is to keep all the dollars I've already caught. So look, this is one of the most important lessons in the market, okay? Earnings can punish perfection. All right. The earnings don't happen in a vacuum. A company can report great numbers and still get sold off. Well, why does that happen? Well, because the stock price already reflects expectations. That's the simple answer. If expectations are low, good news can send a stock flying. Well, like it did with Micron back in October. Okay. If expectations are high or, are already sky high, good news might not be enough. And that's what I mean when I say earnings can punish perfection. The report can be good, company still strong, and the long-term thesis still remains intact. but the stock dumps because investors wanted it to be flawless, okay? And that's the danger of holding a monster winner into a high expectations event. You're not just betting on good earnings, you're betting on good earnings, great guidance, strong commentary, no margin concerns, demand weakness, no supply issues, no valuation pushback, and no reason for traders to sell the news at all. For me, that's a lot to risk after a huge move. Okay. And again, Micron may deliver. I'm not saying they won't. But I don't need to gamble a monster win on earnings reaction. Just doesn't make sense to me. So that's the whole point. This is not about fear or panic. This is about, me saying the position worked, the setup changed, and I'm choosing discipline over greed. That's it. So what now for Micron? Okay. Sold doesn't mean gone forever. Maybe it goes back on the watch list. This is another thing that people ultimately get wrong. When you sell a stock, people act like you have to hate it now. I don't hate Micron. I just respect the move. Okay. I respect the company, the theme, but I'm moving it back to holding it on the watch list. Okay. And that means that it has to earn its way back into the playing field, so to speak. Okay. I would absolutely look at Micron again if we get a much cleaner setup. Okay. Maybe that's a huge pullback after earnings. Maybe it's a reset in expectations or a base building period. Maybe it's just a hard flush into support. It could be a broad market pullback or something like that. But I don't want to chase it just because I used to own it. All right. And that's how I manage the beast personally. The beast, again, is not supposed to be emotional. It's supposed to, or it's not supposed to chase every monster after it already ran. The beast is supposed to own scarce, powerful, high quality themes that we need, that fit, and that the setup makes sense. Okay. So Micron can come back, but it has to earn it as far as I'm concerned. Remember, sold does not mean gone forever. It just means the stock has to earn its way back into the playing field. All right, so obviously that's a lot of extra cash lying around. So the obvious question would be, well, what might replace it? Okay, and one name I'm watching closely, like I've told you, is Eli Lilly. But I want to be careful with the wording here. This is not, I sold Micron and now I'm buying Lilly. Okay, that's not the point. Lilly is a candidate on the watch list. It's not a chase. Okay. The reason I'm interested in Lilly is because it gives the beast a very different type of exposure. Micron is AI infrastructure. It's memory, semiconductors. It's tied to the data center build out. Lilly is extremely different. Lilly is application layer scarcity. Okay. It's biology, it's behavior, it's health data, it's medical intelligence and manufacturing at scale. Okay. It's cash flow tied to one of the biggest demand curves in healthcare also. That's why I'm interested in Eli Lilly. Okay. But I'll just say this. The interest is not the same as the entry, okay? Just because I like Eli Lilly doesn't mean I have to buy it today or start a position today. Just because I sold Micron doesn't mean the money has to be redeployed immediately. Cash can wait, okay? And it doesn't cost you to hold it, all right? Now, I understand there's a decay cost there because your money's not working, but it's not going to hurt you to have some extra cash lying around, I promise, okay? So Lilly may be the next candidate, but it still has to re-earn the entry. And right now, I like the idea more than I love the price. So that's the discipline in a nutshell. So what's the real lesson here? Well, the real lesson is simple. Selling a winner is not betrayal. It's just capital rotation or capital allocation, okay? Doesn't mean the company's bad or the thesis is dead or the stock can't go higher. It just means you're allowed to reassess, okay? You're allowed to say, wow, this worked. It did its job. That's what I'm doing this for, okay? But ultimately, the risk reward has changed, and now I'm going to protect my capital while I wait for the next setup, okay? That's not weakness. That's patience, and ultimately, that's the job, all right? Most investors are, terrible at selling winners because winners they just feel personal. They make you feel smart. They validate your thesis. They ultimately become part of your identity. And that's where things can get dangerous because the market does not pay you for loyalty, okay? The market pays you for smart decisions. So simply put, Micron was a monster winner. I'm grateful for it, okay? And I will keep watching it. And I may own it again someday. But right now, after that kind of move, I made the decision to step aside and protect the win, okay? Again, the goal is not to catch every last dollar. The goal is to keep the dollars you already caught and redeploy them when the next opportunity earns capital. That's the bullish bear way, okay? Bare truth, real money, real risk, and real decisions. So look, guys, if this content helped you at all or you learned something today, please smash the like button, subscribe to the channel, and tap the bell notification so you can get access to all our content. And if you know somebody that could really benefit from this type of stuff, feel free to share the channel. It doesn't cost you a dollar. My name is Mike. This is the Bullish Bear Show, and we are out of here.